This conference will now be recorded.
All right, good day, everyone. I am Steve Szymanski on behalf of Wealth Foundations Northwest. I'd like to welcome you all to the weekly prepper, getting you ready for the week of April 20th. Happy to be here with all of you. Just a quick reminder that, and if you want to reach out to me for any reason, here's my information. Quick reminder that your trades are yours, not ours. We don't act as advisors in any way, shape, or form, and trading does, in fact, involve risk. All right, normal schedule this week. I'm back on the road next week, but I'm still going to try to keep a normal schedule and reach out to me if you have any questions or comments about the portfolio or trade ideas, that sort of thing. There's my information. All right, so the seasonality predicted a big run up, and what did we get? We got a big run up, okay, recently, a very large run up. And it doesn't look so good for between here and May seasonally, okay, on average. Now, it could be very different outcome than what we typically have. It's not going to always be exactly that, but there's reason to be cautious from a seasonal standpoint. And so far, the seasonality has held up pretty good. We had a very lame first quarter. Okay, we had a little run up here recently, and the potential is there for a very lame back half of April and May after we've up near the high of the year. Okay, so massive bounce did continue another week. So we had a great bounce last week, got another one this week. Over the last 11 days, we have set a point record for the most points the market has moved up ever in the history of the markets. Not percentage wise, not percentage wise, but point wise. So we've had a huge move. Okay. Many were caught in an overly short position. So you had some short covering as well as some new buying. So it was both. And the ceasefires, the opening of the Strait of Hormuz, and all those little successes that signal the potential end of the war, all of those things were big positives. Oil, which has been mostly negatively correlated with the market, there was a little bit of a departure from that, but for the most part, when oil's been dropping, the markets have been rallying, and vice versa. Oil has plummeted down to $82 a barrel. That's a big drop considering it was over 100. Okay, now it's dropped all the way back down to 82. Economic reports are fine. I've been saying all along, don't worry about a market crash. Even while it was correcting, I said it's correcting, sure, but don't worry about a market crash. Don't worry about a sustained bear market. Anytime the economy is fine. You had CPI ran a little hot, but PPI ran a little cold. The jobless claims are fine. They're like in the low 200K. That's very reasonable. Okay, the manufacturing numbers were very very good. So not a lot of problems from an economic standpoint. Not even the inflation is causing massive problems right now, despite the price of oil spiking temporarily. The SPY was up 4.8%. The NASDAQ clearly led the way. I said that too. I said, the tech may lead us out of this thing, as it often does. It often does. So the NASDAQ bounced 6.18%, Russell 5.54%. So the risk on trade was definitely in play. Even gold did okay. Oil got hammered 12.72%. Bitcoin bouncing back, entering a buy zone. I think we ought to get long Bitcoin. I really do. And look at it maybe a long term leap and just sell shorts against it every week and just kind of join the party. Maybe not sell the leaps, sell the shorts just yet. And I'll show you why in a minute. Energy, utilities were down. All others were up, led by tech and discretionary in terms of the sectors. In terms of the sectors, all of the sectors were up except for energy and utilities. Utilities was just down a little bit, and then as you can see, tech up quite a bit. As far as a breakdown of how it's been going over the last month, you can see tech and basic materials have been very strong over the last month. Over the last week, tech still very strong. Consumer cyclicals also strong. Communications has been a strong area for the last week or so. And then you can see on Friday, boom, only energy and utilities were down. Everything else was up with cyclical industrials tech kind of leading the way here just on Friday, just looking at Friday. Now, here's the weekly section. Now, this this rectangle right here, that includes all these big stocks, both the consumer cyclical and the tech, okay? This big box in the upper left corner is about 45% of the market. 45%. And you can see it killed it. Just about everything up big. Tesla up 14%, Meta up 9%, Avgo 9%, Nvidia, Microsoft. I don't think Microsoft is done yet. I think Microsoft can continue on. And a lot of other sectors not quite, lighting the world of fire. You can see that energy utility is off a little bit. So the equal weighted S&P, the equal weighted S&P that gives all the sectors equal weight has not even hit its high yet. Okay, but the S&P clearly has. So the markets have priced it in. The war conclusion is assumed that we are basically done. And so there is risk to the downside if agreements implode for any length of time. Oh, you'll have a skirmish here and there. There'll be some posturing here and there. That's to be expected. But basically we've priced in the idea that essentially the strait will stay open, that oil will continue to come down. And if inflation subsides enough, FOMC governors have talked already about rate cuts still being possible this year. So that could still happen, and that could help the markets. Whether it actually happens or not, I don't know. I think that depends a lot on how quickly Trump can get his guy approved. If Trump can get his guy approved, then I think you'll have more support for rate cuts this year. If Powell hangs around and the confirmation hearings slow things down, then it's going to take a while. Okay, and if for some reason inflation persists. Earnings season has officially kicked off, done reasonably well. I know Citigroup had some good numbers. I think for the most part, a lot of those early reporters have done okay. Netflix got a bloody nose last week, a little bit, but it seems to have maybe stabilized a little bit at least. We can look at that. And so this volatility is normalized. The VIX has dropped back below 20s, around 18 and some change. And so now we got a VIX back in the teens after it spiked, into the 30s. Okay, so the volatility play was there for sure, but it's normalized, and now we can think about maybe picking up a thing or two. We've got a quiet week this week. Got some retail sales numbers on Tuesday, the usual claims number, a little bit of PMI on Thursday, maybe a rehash of one of the consumer numbers on Friday, but nothing there. So it's looking like a very quiet week news-wise as far as economic reports go. But of course, all bets are off with the Middle East, right? So what do we expect this week? We expect that financials, real estate, tech, communications, discretionary, we expect them to remain strong this week. Moderate, who knows, with is the selling done with utilities? Who knows? And we expect materials and industrials to hang in there reasonably well. And we expect energy to continue to be weak. Healthcare and consumer staples continued to be on the weak side, not horribly weak. Nothing is horribly weak in this market. Okay, but the weaker ones, besides energy, are going to be healthcare and consumer staples, as far as I can see. And here are the earnings to look out for in case you've got anything going. Some of the biggest things are going to be happening on Wednesday. We got Tesla reporting, IBM, Boeing, AT&T, Texas Instruments. So we got some pretty big companies reporting on Wednesday. Anything else happening here? Alaska, who cares? United, who cares? So a couple of the airlines reporting. You got GE's pretty decent, 3M a little bit interesting. Later in the week, Intel is going to be reporting. I've been starting to look at them again, Schlumberger. So not a lot this week, but it's just sort of continuing on. I've also got American Express on my radar, but it looks like a lot of the airlines are reporting this week, and sprinklings of other things, and a couple of credit card companies. There's Capital One, American Express. Not a lot of tech. It looks like Intel is the main tech, and Tesla, I guess. Tesla and Intel are the main techs reporting this week. Okay, so let's get into the portfolio. Our performance has been great. So market's up about 3 to 4%, and we're up about 24%. Okay, so we're doing about 6 times the performance of the market. So we're in American Express. We need to get out of American Express. Our first long is in the money. So this trade is done well. So what was that? What was that earnings date again? That earnings date is Thursday. Okay, so we got a minute. Let's look at American Express, but that trade is profitable right now. AXP, and we'll see if, yep, it's running. Might be running out of gas here in this coming into this selling zone right here. So yeah, let's put a trail stop on that, and just in case it starts to take a breather. I think it's in good shape, but I think I need to. I think we're going to take some profit here now that our long is in the money and the earnings is coming up. So let's just start that process. We're up a couple $100 in a very short period of time. That's good. Create closing order, sell the entire butterfly, and let's do that on a trail stop. And I'm going to give this one a little leeway, not 50 cents worth of leeway, but maybe 25. Let's cut that in half. Do about a 25-cent trail stop, and let the trading. Let's make it 20. Let's tighten that up a little bit, and let the trading guys decide how we're going to get out of that. I think it's liquid enough to do that. Well, wait a minute. The bid-ask spread's pretty wide here. Let's just kill it. Let's just kill it with a good limit order. Try to get our price, because it's when these spreads are too wide, it's not a good idea. I'd rather do a limit order at the mid strike. Let's do a limit order at mid strike. Let's cash this one in. And if it doesn't fill right away, we can play with that. Okay. All right. So we're going to take our profits here. Gold is a lotto ticket that expired, so that one's done. Lulu, and do we want to get back in on gold? I don't know if I think I'm mostly bullish on gold, but do we have a good entry right now? It's just, yeah, I don't think yet. I don't know. I mean, it's run up a little bit. It's in the middle of the range. Here's what's bugging me about this, and here's why I don't really want to get into this right now, is it looks to me like this downward trend is still kind of mostly intact. So I'm not psyched about gold yet. I'm interested, but I'm not psyched. Lulu is in a bear call spread, and I think that's been performing just fine. It's one of the few things that really hasn't been exploding to the upside, and that's good because it's one of our bearish trades. It's starting to form a head and shoulders, an upside down head and shoulders pattern, also a cup and handle. So it was struggling to hold its the 50 SMA was resisting, is what I'm trying to say, and it's no longer resisting. So again, we've got to put this one on a tight leash, because if this breaks, it could go. And so we are close to break even on this one, but I think I'm gonna. This one is liquid enough. I think I may. We'll just keep this one on a short leash in general. All right, on the Qs, we have left ourselves. We have cash flowed very nicely on this one. I tried to sell another short on this one. I think I need to. So we're out to May. We're short. We're long the 590 and long the 650, and I've just let this run. But what we need to be doing is, on a pullback, sell a put such that we turn our. I want to turn our put into a bull put on a pullback, not right this second. Okay. And on the short, for the call side, I didn't want to get in the way of this exploding the upside. So I'm letting this run the upside. What I might do is, while we're waiting to see if this is going to start to base or something like that, why don't we roll that long, take some profit off the table, and balance our delta a little bit? That's what we should do. So when you do that, your cost basis goes down. And so I think we're profitable on this trade. We have this, we've made $2,000 on this trade. So 615 is our short. And so how many dollars are we in the money? Man, we're a long way in the money. So 1615 is our long. I'm sorry, 615 is our long. I say we roll this up to at the money. Let's roll this from 615 up to 650 and neutralize our delta a little bit. Okay. And then we'll decide when and where to sell against it. For now, we're going to take a tremendous amount of profit off of the table. Okay. And go from there. All right. So we had our short call went in. We had a short call. Our short call went in. I did sell a call. Did we get assigned? Oh, darn it. I did sell a short call. We're short 100 shares. I'm sorry. I should have closed that. I did sell a short call at 640. So it was only $10 in the money. But then we just got assigned. That's not good. That was my mistake. So let's put a trail stop on that. We'll buy to close, and hopefully we'll have a little bit of a pullback on Monday. And we'll trail stop that. Trail stop that. Nice and tight. How's that? Confirm and send and send. I should have. I didn't notice that before. I just noticed that we got assigned. Hopefully you didn't. And so that short should have been rolled. That's what we should have done. We should have rolled that short. And when that resolves itself, that's why I don't have any buying power. I was wondering why I didn't have any buying power. All right, so I'm not going to put any new trades on just yet, and we'll try to have our trading lab early in the session, early in the week, Monday or Tuesday, so that we can get the new trades on. But be sure to close that short, those short shares. That's unfortunate. I just noticed that just now. All right, so let's do that, and we'll reconvene Monday or Tuesday and go from there. On behalf of Wealth Foundations Northwest, it's been my pleasure to be your coach once again today. Good luck, good trading. Take care. Bye-bye.